Hello friends, how are you? Vladimir here. This is the weekly forecast for the very first week, March 2015. Well, before I go over the technical things, quickly let's take a look over the fundamental. This is going to be a very busy week. Starting right today with the final manufacturing PMI from China. Then we have flash estimate CPI tomorrow in Eurozone, manufacturing PMI Britain. And the main event tomorrow would be, of course, the cash rate in Australia, which is expected to drop down. Then we have the statement, of course, expect an action on the Australian pairs. Tuesday is going to be busy, basically on Euro and Britain area. And we have a speech from Yellen, of course, GDP from Australia. Wednesday starts to get us close to the non-farm payrolls. On Friday we have the ADP to be published, and we have cash rate in Canada. We have trade balance in Australia later on. Thursday, very busy week again for the Britain and Eurozone with their cash rate, and Friday, the main event of the entire week, non-farm payroll. As we already know, non-farm payrolls week tend to be annoying sometimes with trading. Moves could be not clear, some ranges could occur, and some zigzags and false break may happen. So it's very important to keep very low risk on non-farm payrolls weeks. It could work, of course, both ways. So, but basically, non-farm payrolls week, because of the expectation for the non-farm payroll report itself, the market tend to be less volatile than normal. Let's start now with the technical view. The first pair on the list is Euro Pound. This pair is making a very massive drop down, and I think we still have room to drop. We are going to the bank zone starting from 0.1750 down to 0.6850 and maybe even down to 0.6750, the final area. This is going to be the duplication of this wave. Each of these two waves is built by two waves itself. This one and this one and this one should be two. So basically we have more to go, but prepare yourself, because from here we are going to have a lot of action. This is a very serious area, right, starting from 0.7050 and a bit lower. This pair is going there very likely. You can expect a lot of action right there. Monthly chart is about to form extreme very soon. Last time it happened on the monthly chart was right back then on 1997, believe it or not. See that? That was the last time here. We got small reaction of, small, 900 pips, even with more, then drop down, and then we all remember the reversal happened. Now I don't claim that's exactly what's going to happen. I do claim, though, this extreme will bring a lot of bullish fight, so pay attention to that. Same about the weekly chart, which is approaching right there. Last time it happened on the weekly chart happened way back then, again on same 1997, and we already talked about what happened since then. And of course the daily chart is approaching a monster divergence. Basically, I think the daily chart is also about to duplicate itself. This wave we have right here. So again, it brings us pretty much to the same place. So basically, on the short term, every small rally, drop down to the 1 hour chart, 4 hour chart, every rally is opportunity to go for a sell. In this case, with bearish hidden divergence. The next rally could bring continuing divergence or another hidden divergence, whatever it is. Every rally still brings us in a sell. We have more to go, but get ready, because whenever the next buy is about to take place, it's going to be massive, really massive. And I think whenever it's ready, we are going back to this trend line at least, which means we could expect it at least for 500-600 points. That could be really amazing opportunity. Of course, it's going to take time. Okay, we are still in the bearish zone, and as I said, on short term we still have to sell rallies, but it's about to hit, and it's going to take several weeks probably. But when it happens, bidder, this opportunity will be amazing. Pound dollar is also a very nice opportunity, yet I think, at least by the way that this pair behaves right now, that midterm drops should take us as buy opportunity, because the way I see that, this entire wave has to reach at least, if we measure its Fibo, you will see that this 38.2 is also on a very massive resistance zone, actually a bit higher, but this zone starts right here. Okay, so basically very likely to believe this pair is going to this place. That's what I think is about to happen. I still remain bullish in my mind for this pair, but watching on a daily chart and 4-hour chart combo, I think we're about to get double. That was 1, 2, 3, 4. Now we should get 1, 2, 3, 4. So basically, I think this pair has more probability to make one more drop down. From here, I would be definitely looking for buy opportunities. So basically, as for now, I still remain bearish on the short term, and basically as explained on Friday. Okay, I'll just continue with my momentum here, and if I'm wrong and the last high will be broken, we can say we are going for new highs. But so far, I remain bearish first of all on the short term, then switch to bullish. The only way I will remove and be bearish for the long run would be if this pair will somehow break below this support zone. It will make me think then. Okay, but so far I am very bullish in my mind. On the midterm and short term, very bearish in my mind. About the euro dollar, well, I don't know. I think that this pair has more to go, 110, 108 or so, but once again I will claim and say euro is about to hit monthly extreme and weekly extreme combination, which is already there. It's going to create a divergence here together with extreme. It's massive, and despite of all the crisis right now around the eurozone, there will be a reason for the euro to recover. Pay attention to that. The next pairs, about the dollar yen. I've been asked a lot about the dollar yen on the last week. I am really not sure, so I leave this pair alone as for now. I still think the breakdown below this trend line should bring down. I cannot tell, I read the chart too well of the dollar yen right now currently. I will not be surprised if we reach final high of 124, 123 or something like that. I would also not be surprised if we're dropping down seriously from here. Really, no idea. So from my point of view, it's best to leave it alone. The next one is dollar Canadian, which I think has more possibility of a down move, but it's a bit tricky because it has 3 spots from the bottom and it has 3 spots from the top. It's about to make a break. Break up could bring us for a final rally to 129 or something like that, maybe even a bit higher. Break down and we can start to go to 122, 121 zone. Pay attention, this range starts to be very interesting and should bring a lot of activity. New Zealandian dollar is probably about to complete its triple wave, 1, 2, 3, 4. So we should get going to 0.76, 70, 0.77, something like that. It would be around weekly 20 MA, maybe even a bit more. So basically, I still think buy dips on the midterm. We did enjoy from this sell last week. As explained on forecasts, of course. Now the possibility is, of course, for new highs to be taken. Every drop down is yet, from my point of view, is opportunity to buy. Now about the Australian dollar, it's a bit tricky because the news and the cash rate there could start to be the next final drop of this pair back to 0.79 or so. So pay attention for this small range. It started to develop, break below that, and we could start talking about the next wave down. So basically, the way monthly chart and weekly chart combo looks, there is still more chances for a sell rather than a buy. So careful with the buy here. And Aussie Kiwi should continue for its next bottom, 102, 101, probably even a bit lower. So from my point of view, the way it looks right now, if we get any rally, back to 103.60, 104, somewhere there, go for a sell. This pair has more to suggest down, and will probably get us there. I don't see any reason at least at this stage, for a bullish move for this pair. I do think we need one more final bottom on a weekly chart, and that's what it's performing. Then this divergence will complete itself, and then we'll start the reversal for the next years to come. Bit early, so every rally coming, go for a sell here. That should use us very, very good opportunity. Last high should be really enough to protect. Let me see my list. Talked about that. No, basically that's all. Believe it or not, I have few more pairs I start to have on my watch list. Potential Euro Kiwi, but again, it's not yet. I need it lower in order to go for a buy. How much lower? Well, there is a trend line if we connect it here. So basically, that's where I expect an action, 144, 143 or something like that. So I remain bearish on the short term. And pound Kiwi, I think it's about to be very, very interesting here, because it makes band to band back to the middle. Could be perfect buy opportunity, and that's what I think we should get ready for. The probability of duplication here, and from this place we might start to face good reactions for a buy side for pound Kiwi. So start to pay attention. We are getting very, very, very close. And a bit about investment. From my point of view, natural gas is on a massive zone. It duplicated this way. It's almost on the low of all times. That's how good investment opportunity look like. Why? Because if you trade against the zero, which is the minimum bottom, right? That's the lowest level. You know your risk. You know exactly where this zero comes in. Of course, include in the swap, include in the contract change that could take time over holding that, put it into the total risk. And remember, that was where it was several times above 13, several times in the past. Okay, whenever, and that could take a lot of time because that's how investment look like. We will be around these levels. So consider the potential risk for potential profit. It's almost, it's actually around 4 or 5 times higher for a very known risk, because you trade against the zero here, and you know your next potential profit. Now, I don't claim you need to expect it to happen the next week or month or year. Maybe yes, maybe no. Okay, no one knows that's such long future. But whenever and because of whatever reasons it will happen, the gas would be on its top again, or at least above the middle of all times, which is here. And again, it's really wonderful opportunity for a buy against the zero. The risk is very, very well known. Okay, and of course don't need to trade maximum risk here, but the chance to profit for a long run is exactly what makes me think it's great time to be involved. Okay, and basically that's all. I'm in if you wonder, of course. And I'm about to hold it and hold it. I trade against the zero. No risk. The zero is my maximum level risk, of course. Okay, so we also all know that the world is trying to move and rely more and more and more on gas use rather than other heating materials and stuff. So basically that's all for this week. One more thing. Start to pay attention for Dow Jones. 18,300 could really be a good level, but I wouldn't trade it before. I wouldn't invest in it or trade it long run before non-farm payrolls. Maybe on the intraday you can try and trade it. we need to start to pay attention, because here we might here a bit above it we might see a lot of fights. Well, let's see where the market brings us and what it takes us on this non-farm payrolls week. As for now, on the weekly video, it's more than enough. I will keep you updated, of course, on daily videos. So thank you for watching, good trading, and I'll see you soon. Yours, Vladimir.